Hello everyone, let's talk about a truly historic moment. On October 7, 2025, gold broke the $4,000 barrier for the first time ever. This isn't just another price jump, it's a wake-up call for investors and everyday people alike. Gold's rise of over 50% this year is its best performance since 1979, a time of major economic upheaval. As of October 8, gold is holding steady above $4,000, signaling a powerful, ongoing trend. This isn't a fluke. It's a sign that people are searching for safety in a world full of uncertainty. When gold hits a record high, it stirs both excitement and anxiety. Should you have bought in, and what does it mean for your savings? The answer. This price surge reflects deep worries about the stability of our financial system. People aren't just chasing profits, they're losing faith in traditional investments. So, what's driving this gold rush? We'll break down the key forces. Media Group, U.S. Capitol building with chaotic protest, falling dollar bills and gold bars, crowded gold market in Asia. Stock distribute equally, U.S. political chaos, a weakening dollar, and global demand. We'll also look at how big banks and entire countries are stockpiling gold, and what history can teach us. By the end, you'll understand not just what's happening, but why, and how you can protect yourself. Let's dive in and make sense of this golden milestone. Because in times like these, knowledge is your best financial defense. Let's get started. Why gold? For thousands of years, gold has been the ultimate store of value. Rare, beautiful, and immune to decay. Unlike paper money, you can't just print more gold. Its scarcity gives it lasting power. Think of gold as financial insurance. You hope you never need it, but it's there when things go wrong. When markets are shaky or inflation looms, people flock to gold for safety. Gold is a safe haven asset. Its value often rises when confidence in governments and currencies falls. It's not tied to any one country or company, and its worth is recognized worldwide. When you worry about your money losing value, gold offers stability. The rush to gold isn't about getting rich, it's about not getting poor. In today's uncertain world, gold's appeal is stronger than ever. It's the ultimate vote of no confidence in the status quo. That's why, in 2025, gold is shining brighter than ever. Let's get specific. Why are people so worried about the US right now? For decades, America was the world's financial anchor, but cracks are showing. The US recently lost its top credit rating from all major agencies, a huge red flag. This downgrade signals doubts about America's ability to manage its soaring debt and budget deficits. Political gridlock in Washington makes real solutions seem impossible. Investors are asking tough questions. Can the U.S. keep borrowing? What if the will to pay back falters? Once, U.S. Treasury bonds were the safest bet. Now, even those are under scrutiny. Big investors and foreign governments are diversifying away from U.S. assets. They're searching for alternatives not tied to one nation's politics. And gold is the answer. The more America's creditworthiness fades, the more gold shines. This shift is driving a massive move out of traditional assets and into gold. The world is watching, and confidence in the U.S. is no longer a given. That's why gold is now the go-to safe haven. When trust in the system erodes, people turn to what stood the test of time. And right now, that's gold. Nothing rattles confidence like a government shutdown. The recent U.S. shutdown sent a clear message. Political dysfunction is now a real economic risk. When leaders can't agree to fund the government, it raises doubts about their ability to handle bigger challenges. This chaos erodes the trust that underpins the entire financial system. For investors, a shutdown is a flashing warning sign. The U.S. has long been seen as politically stable, but now that reputation is in question. The shutdown, combined with credit downgrades and rising debt, poured fuel on the fire of anxiety. Investors are asking, if the government can't keep the lights on, how safe are U.S. assets? That's where gold comes in. It doesn't depend on politicians or policy. As faith in Washington weakens, faith in gold grows. The shutdown accelerated the move out of U.S. paper assets and into gold. It was a wake-up call for anyone relying on the old system. Gold became the ultimate hedge against political risk. Another key factor, the weakening U.S. dollar. In 2025, the dollar lost about 10% of its value against major currencies. A weaker dollar means higher prices for imports and less purchasing power for your savings. The Federal Reserve's hints at cutting interest rates made the dollar even less attractive. There's a classic relationship here. As the dollar falls, gold rises. It takes more weak dollars to buy the same ounce of gold. So, part of gold's surge is simply a reflection of the dollar's decline. Globally, countries are starting to reduce their reliance on the dollar, a process called de-dollarization. This shift lowers demand for dollars and boosts gold. A weaker dollar makes gold cheaper for foreign buyers, increasing demand. The same forces weakening the dollar are driving people to gold. As trust in the dollar fades, gold's appeal grows. The dollar's slump is a powerful tailwind for gold's record run. So, how are investors reacting? They're making a great escape into gold. Money is flowing out of risky assets like US bonds and into gold at a record pace. Gold-backed ETFs saw a massive surge in demand, over 100 tons added in September alone. This isn't just nervous individuals, it's long-term, sophisticated investors making strategic moves. The smart money is hedging against deep systemic risks. What's unusual is that this gold rush is happening even as stocks hit new highs. Investors are locking in profits and protecting themselves in case the market turns. Gold is their insurance policy against a shaky system. The message: even in a strong market, fear is driving people to safety. Gold is the asset of choice for those who want to be prepared. It's not just individuals. Central banks are buying gold too. From China to Turkey, national banks are adding gold to their reserves at record levels. This is a strategic move away from the US dollar and toward a tangible, independent asset. Central banks see the same risks: US debt, political instability, and a weakening dollar. Their buying creates a steady demand, putting a solid floor under gold prices. When the world's most conservative investors buy gold, everyone pays attention. This official buying validates gold's role as the ultimate safe haven. It encourages other big players, like pension funds, to follow suit. The result: a domino effect of money flowing into gold from all directions. This broad demand makes the current rally robust and grounded in real economic anxiety. Gold's foundation has never been stronger. For market veterans, today's gold surge feels a lot like 1979. Back then, gold more than doubled as inflation soared and the dollar plunged. People lost faith in paper money and rushed to gold for protection. The parallels are clear: economic fear, a weak dollar, and a flight to safety. But there are key differences now. Today's inflation isn't as severe, but the fear is more about government credit and political stability. The anxiety is structural, not just about prices. Another big change. In the 1970s, central banks were selling gold. Now, they're buying. This official support gives today's rally more staying power. The fear is familiar, but the foundation for gold is even stronger now. That's why this rally could last. As of October 8, 2025, gold sits above $4,000. More than just a number, it's a symbol of global anxiety. Political dysfunction, soaring debt, and a weakening dollar have created a perfect storm. Investors and central banks alike are seeking refuge in gold's timeless security. The forces driving gold higher aren't going away soon. US divisions, rising debt, and global de-dollarization are all still in play. Some analysts predict gold could reach $4,900 next year. Whether or not that happens, gold has reasserted its place as essential insurance against systemic risk. For you, this isn't about panic. It's about being informed and prepared. Don't put all your eggs in one basket, but understand the shifting landscape. Gold's record price is a wake-up call. The world is changing, and so should your financial strategy. Stay alert, stay diversified, and you'll be ready for whatever comes next. The story of gold at $4,000 is a lesson in resilience. Be smart, be safe, and keep learning.